Hey guys, welcome to another episode with me, Shashank Godappa. And in today's episode, we will look at momentum investing. Now, momentum investing is a strategy that is built on a simple principle that stocks have been rising and they will continue to rise, and stocks that have been falling will continue to fall, at least in the near term. Now, this isn't about finding undervalued companies or waiting for some turnaround stories. Instead, momentum investors focus on buying the stocks that are already showing strong price performance and betting that this upward trend will continue for the next few months. Now, the strategy operates on the belief that market trends don't reverse overnight. And when a stock starts climbing due to strong earnings, positive news, or sector tailwinds, it often attracts more investors, creating a self enforcing cycle of buying that pushes the price even higher. Now, momentum investors basically aim to capture the continuation of the trend rather than trying to predict when it'll end. So, unlike value investors who buy cheap and wait, or growth investors who bet on the future potential, momentum investors are purely focused on what's working right now in the market. So, let's understand first how momentum investing actually works, and we will look at it in practice. So, momentum investors basically analyze a stock's relative strength. They will compare how it is performing against the broader market or against the sector peers for a specific period, maybe 3 months, maybe 12 months. Now, if a company has gone up 35% in the last 12 months and Nifty has only gone up by 12%, now that company shows positive momentum and becomes a buy candidate. Now, the strategy requires identifying these outperformers using some quantitative filters. Now, investors screen for stocks with the highest returns over a period, also known as the look back period, often combining price performance with volume data to confirm strong buying interest that also backs the trend. But the main problem here is momentum investing demands very good discipline. You need to have clear entry and exit rules, typically buying when a stock breaks out to new highs with strong volume, and selling when it breaks below a certain threshold or when momentum indicators weaken. Now, stop losses here are very critical because momentum can reverse suddenly, especially during market corrections. Now, the strategy works only because of behavioral biases. Investors tend to underreact to positive news initially, right? But then it creates a gradual uptrend that can persist for months before the trend exhausts. So the key is capturing most of this trend and exiting before the reversal. So let me do one thing. You might have heard that a lot of momentum investors talk about factor based investing, or this factor or that factor. So let me show you quickly what are factors and which factors are actually won in the past. So look at this data that we have got, which basically talk about the yearly factor leadership on a year-on-year basis. Now, there are different types of factors and not all factors work all the time. For example, we have low volatility as a factor. These are stocks that usually don't move much. Okay. Then we have momentum as a factor, which usually moves very well. Then we have quality, which is only good companies. Then we have value, which is deep value companies. Then we have Nifty 500, which is the index. And then we have something called alpha based strategy, which is again Nifty 200 alpha, which is different, right? So these are the different types of strategies that are currently available. Now you see, depending on the market situation, each factor basically changes. Now, if you look at 2006 and 7, before the 2008 fall, momentum was the clear winner, right? It was in number one position. Momentum had 42%, alpha had 43%, low vol had 43%, Nifty itself was at 36% on that year. Same thing in 2007. Nifty was 64% and momentum was 100%. But immediately after that in 2008, we saw the whole market crash, and momentum, which was 100% last year, became minus 60% and alpha went down to minus 68. And low volatility, because these are stocks that don't fall too much, they were at minus 42 when the index itself fell by minus 56. So they actually did not fall as much as the index, right? So this is how factors change constantly. If you look at it in recent data, in 2024, alpha was the clear winner. In 2023 and 22, value was the clear winner because Nifty in that year in 2022 had only given 4.2% return because of the Russia-Ukraine war. Momentum was negative minus 5. But one beautiful thing about factors is that they keep changing. One year, momentum will be there. Next year, something else will be there. Very rare that you will see right at the top that there will be back-to-back same factors playing out. For example, only in 2006 and 7, we had momentum for 2 years. And in 2022 and 2023, we had value for 2 years. Only in these two periods, we have back-to-back momentum or back-to-back factors, right? Every time else, we had quality, value, alpha, quality. So it keeps changing and it goes up and down rapidly. But if you see Nifty 500 over here, they're always almost never the best performing, right? That means most of the time, some other factor is always beating Nifty 500. So, which is very beautiful because now you know that you can beat the index. And if you look at the sector rotation, now also all of this depends on sector. If you look at sector rotation, as you can see here, in 2006 2007, metal gave 143% return. Immediately in the 2008 crash, obviously all your real estate companies went down by minus 82% because this was the 2008 crash. And if you see your FMCG, which is your free cash flow players, they were at minus 17%, giving deep value at that point or giving low volatility at that point. Same way, if you look at 2019, real estate was number one at 29%. And then we had pharma because this was at the end of 2020. So in 2020, we had the fall, but we also had the rise of pharma at that point. So pharma became 61%, IT was 58%, and PSU Bank had two bad years. As you can see here, in 2019 and 2020, PSU was minus 18 and minus 30. And then straight away next year, PSU was plus 44, and 2022, PSU became the top, which is plus 74. And the same way, if you look at it opposite, metal from number one position went to number two and then went straight towards the end. Same thing you can see in IT, where you see in 2022, IT was the worst performing. Then it kind of recovered a bit and then suddenly it went back to the top three position. So it is very random. And you should understand basically from investor standpoint that when you play momentum, please understand that momentum by default, by logic, changes every single year. And it always changes according to different sectors. And this is how sector rotation works. It is never easy to basically tell you that which is the next sector that will do well, right? These are all data that has been done. But in the year 2025, even you will not know by the end of 2025 what will be the best sector, right? So we have to obviously identify trends and try to understand what can do well, what might not do well, and things like that, right? So today what I'm going to do is I'm also going to share with you a very good trading view screener that will show you top momentum companies. So if you're interested, let me know in the comment section below. I can actually share that screener link with you. So we will talk a little bit more about that. So all of this is very exciting, right? And that is why what I did was I like meeting people who are in this space. In fact, if you remember, I recently did a podcast with Rishabh Nahar, who was from Qode Advisors. Now, basically what Qode does is they don't sell stock tips or they don't use all these AI buzzwords. They basically run quant models. And what do I mean by quant? They have basically built India-specific quant factor-based systems, which is very beautiful, obviously, right? Now, what does that mean in practice, in actual realization, right? So Qode's model, basically, they don't factor one factor into isolation. A lot of people only look at one factor or maybe two factors. They basically track simultaneously what is going on, whether it is momentum, value, quality, low volatility. They do this across multiple and thousands of Indian stocks, and they basically dynamically adjust their entire market exposure to all of these things in their funds, right? So when the market is up, the system will automatically move into, let's say, momentum. And when the market is down or when the volatility spikes up, they basically go into low beta or low volatility or quality stocks at that point, right? Now, they basically do this because the quant systems, they don't have emotions. There's no gut feeling calls. There's no, different type of thought process into it. It is just rules executing properly. And that is how quant firms are basically designed, right? Now, this is mainly because investors, they try to think that everything is diversified. You might think that you're diversified all across, but you're actually unknowingly, you're not diversified. Maybe you're too heavy on two factors and you don't even know that, right? So this is why when I met Rishabh and I spoke to him about Qode, it was very, very, very interesting. And I basically learned a lot from him. Now, what you should also do if you have free time, you should go check out on their website. They have a portfolio review tool, absolutely free. You can go upload your holdings and their system will actually break down all your holdings and tell you factor by factor how your portfolio looks like, right? So basically, they will show you where you are concentrated, where you are overexposed, and they will also show you where you are blind. And that is one of the most beautiful things. I will share the link in the description. It's absolutely free. Go check it out in your own free time. Now coming to the trading view indicator, right? So we call this internally the power play indicator. We basically put some kind of stuff into this indicator where we have some kind of rules into it. And let me show you, obviously now it shows 182 different symbols that are currently there, which are momentum based investing. So if I show you some very interesting companies, look at this. So right now, if you see SBI, which is India's largest bank, is into momentum, right? You look at Bajaj Auto, It is also into momentum. If you see it, it is actually going up. If I look at it from a 1 week chart, you will see that it is in an upward trend. So we use all of these things. As you can see, Hindalco, Metal Rally doing really, really well. Shriram Finance, wonderful momentum. Absolute beautiful momentum is going on here. Torrent Pharma in momentum. So now you're seeing, right? What do momentum investors do? They identify a trend, which is an upward trend like this. They try to enter somewhere in this trend and they try to exit somewhere in this trend. And they usually keep some exit triggers, right? Exit triggers might be, if we break the 50-day moving average, we would want to exit. If we break this, we will exit. So they basically keep some exit parameters. Now look at this, right? This is, let's say, a company called Ashok Leyland. Now see how this has been moving. A lot of people would keep 20-day moving average as their exit. Some people would wait till 50-day moving average. But this is pure momentum. Look at this, absolute pure momentum from when it has started over here, and it has gone up a very good amount. And if I just put simple volume indicators here, right? Look at this. You will see that the day it broke out on this day, which is 18th August, you will also see that it was the highest volume in the year, HVY. So highest volume in the year means it was a very good volume spike, and then it had a follow through and it kept going up, kept going up, kept going up, kept going up, and now it is in momentum right now. And it had multiple HVYs coming after that. But this is basically how you identify very good momentum based companies, right? Now, obviously, this is a very interesting screener. We call it power play. We try to catch momentum as early as possible. Look at this. AU Bank, very good momentum going up again. Bank of India, IndusInd Bank. So banks obviously right now are in beautiful momentum. Look at this. Federal Bank, same thing. Highest value, highest volume in a quarter. Big green spike. Follow through. Highest volume in the year. Follow through. And it is going on and on and on. So this is basically how momentum investing works. Yes, obviously you still have to take a call on when do you enter and when do you exit. Yes, the momentum can also reverse and come down as soon as possible. So it is not extremely easy to do. But if you have a rule, if you have a system, if you have a base, then it becomes very easy to do this. So in this video, I'm going to share two things with you. Number one is that free portfolio tool for factor by factor investing for your holdings. I'm going to put it in the description below. Second, this trading view, how many of you want the screener? Let me know. Just comment below link and I will share this screener link with all the people who comment as well. So I hope you guys enjoy this video. I hope you guys like it. Let me know in the comment section below what do you guys think about it. And if you want to verify some companies, let me know in the comment section below a name of a stock that you feel is in momentum. I will check it out and tell you if it is in momentum or not. This is me, Shashank Godapa, signing off. Take care. See you guys. Bye-bye.